Joining us this morning, JP Morgan's Doug Anmuth has a buy rating and raised his target from 270 up to 305. Doug, great to have you. I mean, you're using phrases like building muscle, rarefied air, and you talk about sort of the balance between the near-term execution and still investing in some of these longer-term initiatives.
Thanks for having me. So in terms of the balance that Meta is seeing, look, we think there's a few things going on here. First of all, accelerating top line growth, which we think really drives a clear path toward mid-teens revenue growth in the back half of the year. A combination of external factors getting better, but then also a lot of Meta's own company-specific initiatives, certainly around AI monetization, and then also some specific products like Reels and click-to-message. And then at the same time, you're seeing really significant efficiency work as well, cost reductions in terms of the headcount reductions that they've done. And the combination of these things is really creating a room for them to invest long term. And they laid that out very well last night, I think, around their comments around AI and still the metaverse as well.
Yeah, you point out that CapEx could increase in 2024. I mean, why is that no longer an overhang on sentiment the way it was, say, 6 months ago?
So I think, so we are modeling CapEx to go up a couple $2 billion in 24, and that is a little bit of a change for us. But look, we think the stakes here around generative AI and large language models are really significant over a multi-year period. And as we've seen this week from multiple mega cap tech companies, there is clearly just heavier investment across this entire space. You saw it with Google and Microsoft, and of course Meta's not giving specific numbers going toward 24, but we think that they're leaving the room. Clearly it's an area of important focus for them, and but the reason it's not as significant perhaps now is because you're seeing really meaningful cost cuts throughout other parts of the organization in terms of both headcount and then other efficiencies in terms of productivity and AI improvements. And so they're basically creating this room in the income statement and the bottom line to keep doing these really important investments that will fuel long-term growth in the business.
So do you not have to be a believer in the metaverse to be bullish on this stock anymore?
That's right, Sarah. I don't think you need to be a believer in the metaverse to be bullish on Meta shares. I think that's right. Look, I think it was very interesting, the comments last night. Certainly, they are continuing to invest here. To be clear, these are big numbers. We have Meta still losing north of $14 billion this year in Reality Labs and north of $15 billion next year. So really significant. But again, it also shows how profitable the rest of the business is, that they're able to kind of fuel those kind of investments for, hopefully for the long-term benefit. And, we think there's a lot still, near-term, mid-term in terms of the advertising growth, and then certainly what they can get with AI as well.